because it's time for the word on Wall Street. Here's Michael Lee, plus Mahoney Asset Management CEO Ken Mahoney and Rosecliff CEO Managing Partner Mike Murphy. Welcome, gentlemen. First up, the Dow closing above 29,000 yesterday for the first time since February, with a 10,000-point gain from the lowest point during the coronavirus pandemic. The S&P 500 and NASDAQ again closing at new all-time highs. Michael, we start with you. Can this momentum continue?
Yeah, I tend to think it will continue. What you're looking at next year is one of the greatest years of earnings growth year over year in the history of the S&P 500. So estimates are already about 13–14% for the first quarter, and then the comparables get much easier for the second and third quarter going into next year. And as we discussed a little earlier today, the economy is recovering so much more quicker and more substantial than anyone could have imagined. Retail sales are up year over year. You have the ISM manufacturing coming out just the other day, not only beating expectations to the upside, but the new orders subcomponent coming in at a 14-year high. These are some of the best leading indicators to show us that the economy is really getting ramped up again, as well as the fact that the consumer, not in the entirety across the nation, but the consumer is spending as much as they were pre-pandemic. And with kind of the wind at our sails, the economy is kind of a big snowball that as it gets rolling in one direction, it just gets bigger and bigger and bigger until it goes off track. So I think this momentum tends to continue. If we see some sell-offs in the market, those are to be bought.
Turning to jobs in America, the August jobs report due out tomorrow morning. Estimates are calling for 1.4 million jobs created last month, the unemployment rate falling to 9.8%. The weekly jobless claims are out this morning at 8:30 a.m. Eastern Time. But we're still expected to see 950,000 people filing for first-time unemployment benefits. Ken, how are you reading this?
So that's the dilemma here. You know, we keep on hearing Wall Street and the stock market is not Main Street, and that's really the disconnect that everybody scratches their head. Especially, they don't like to see sometimes the market go up so high when so many people are hurting. But, you know, just your guest just said, I mean, we have a snowball here. It is getting bigger and bigger, and we are getting back on track quicker than we can. And actually, this is probably the most hated market I've ever seen because, you know, everybody complains, but it's such a narrow market. It's only a number of stocks like Amazon, Apple, Tesla, and so forth. Yet, you know, this is not your Benjamin Graham's value market, so to speak, with ratios and sales ratios. In fact, any of those value stocks or value areas like financials, you're seeing multiples contract. So right now, a lot of investors are taking the fast lane, momentum, which is technology, which was strong before the pandemic, stronger in the pandemic, and probably on the other side of this pandemic, stronger yet, as we all kind of have this work from home or kind of remote world that we have and that we live in at the moment.
One thing I'll point out is that people were saving a lot of the extra, if they were on unemployment, saving that money. The savings rate shot up into the double digits in the spring from that extra $600 per week in unemployment benefits. And I just want to point out to people that that $600 did disappear. The Democrats couldn't get on the page with the Republicans and pass something in additional stimulus because President Trump signed that executive order. One is the payroll tax deferral, but the other was an extra $300 the feds are paying in state unemployment benefits. And the vast majority of states, it's 40 and counting, have stepped forward and gotten approval to start paying out those unemployment benefits. The money started going out in a handful of states roughly last week. So there is extra money, $300 per week, going out to people who are unemployed. President Trump, speaking of him, meantime, weighing in on Twitter after the Dow's closed yesterday. The Dow Jones Industrial just closed above 29,000, exclamation point. You are so lucky to have me as your president. With Joe Biden, it would crash. This comes as J.P. Morgan released a note this week telling investors to prepare for the growing chance that President Trump will win a second term. Mike, your thoughts on the markets looking past the coronavirus and the election?
Good morning, Dagan. It's great to see you. I think the rally is going to continue here post-election. I believe, as J.P. Morgan pointed out, that President Trump will be reelected. But I think the concern out there, if he were to lose, if Joe Biden is the president, I think the market can still get past that because of the rally that we have, because corporate taxes aren't going to go up immediately under a Biden presidency. So while I'm optimistic that President Trump will be reelected, I think the market is going to continue this rally either way. But what we're looking for right now is we want to find companies that haven't had these massive runs like you've seen in the Apples and the Teslas, which are great companies to hold on to if you own them, but I wouldn't recommend running out and buying them today if you don't own them currently. I'm looking for companies that will be able to take off once we get to the other side of the coronavirus, like Uber. When people are back using cars, when people are still using Uber Eats to order, I think Uber is a company that hasn't had a huge rally, but because they have over 100 million monthly users, that I think there's a lot of untapped potential in that company. And then you have Walmart that trades in the mid-20s on a price earnings multiple, but they're going after Amazon. They will get market share from Amazon. And I think a Walmart could be very interesting because they could get an increase in their multiple and trade like a tech company. And there could be a lot of upside for them into the low 200s.
Thanks for that, Mike. It's always great to see you. Mike Murphy, along with Ken Mahoney and Michael Lee. Michael, don't go anywhere. Thanks, gentlemen. Much more ahead this